Welcome to Mirus Industry Analysis, July 2018. I'm Robert Covino. Today we're going to cover the July changes from last year's movements, both in ADS, occupancy, and all other aspects across our industry. ADS has changed quite a bit with the indexation in ADLs and behavior domain of 1.4%, and we've seen a 0.7 increase in a complex healthcare domain. This has driven the ADS for private operators to its highest ever of 190 ADS, with the not-for-profits and our industry slightly below. Since last month, we've seen occupancy grow for the not-for-profits, achieving the highest across all three segments. However, the greatest change has come from the for-profit operators, as we can see here. But overall, across all three segments, occupancy is trending up since last month. Claiming activity is very interesting. We measure the amount of claims that are submitted into Medicare every month. And what we've seen over the last month has been a decline across all three segments. However, the for-profit operators still lead the charge with the highest amount of claims being submitted to Medicare, both voluntary and mandatory, of 12.7%. One of the key stats we look at to determine process around actually claiming activity is the percentage of claims which are excluding the high claims that have not been addressed within the last 12 months. These claims, we can see from a not-for-profit standpoint, have grown to a highest position across all three segments. The for-profits continue to drive the process around claiming activity and addressing the addressable ACT fees and have the lowest percentage across the three segments. Complex healthcare claiming has also been relatively flat across the industry over the last month, with some retraction across actually all 18 procedures. However, if I draw your attention to the pain management procedures, we've seen the biggest decline happening in procedure 3, pain management, led by an AIN or any other non-designated allied health professional. However, we also see a retraction in the 4B claims led by the for-profit operators, but also across the other two segments in our industry. And our first bit of analysis over a trend period is the maximum permissible interest rate. And as we can see here, it's been relatively flat for the last couple of years. However, we are now starting to notch up. However, what's more interesting is our second graph, which when we overlay the MPIR with the RBA's cash rate, we could start to see a disparity of change occurring, which is growing at a rate much higher than anticipated. Could this be the department's way of asking the industry to look for margin on the other side of the business than care? You be the judge of that, and we'll see you next month.